Russia has been slapped with a plethora of sanctions by the West. Earlier this year, leading economies of the West declared that Russia would witness a complete economic collapse and would enter an excruciating crisis. The US president went on to declare the Russian currency to have been reduced to, and I quote, rubble. Then, the Russian currency went on to become the strongest performing currency in the world this year. Ever since, the world has watched with eyes wide open how Russia deals with a tough and hostile economic environment while also being able to mitigate the pain it suffers due to the sanctions. As soon as the barrage of Western sanctions came raining down on Russia, the country took measures to protect its economy, such as barring residents from sending money abroad and stopping trading at the Moscow Stock Exchange. The West thought the world would follow its lead in abandoning Russia for its war in Ukraine. Soon, much of the anti-Russia coalition realized that the developing world was not eager to dismantle ties with Moscow. Russia has found alternative markets for itself in Asia and Africa. In Asia, Russia's top trade partners are India and China, which are the world's two most populous countries. As much as Europe wants to shed its dependence on Russia, Moscow is working to build alternative markets for itself with greater vigor. And then, Europe itself has not been able to abandon Russia completely, with the bloc still depending greatly on Moscow's energy exports. In fact, Russia is the one which has nearly shut the taps when it comes to exporting natural gas to Europe. High energy prices have ensured that Russia continues getting large monetary windfalls due to its significant oil and gas exports, even if the volume of its energy exports has gone down. Russia is on track to earn 285 billion US dollars in energy revenue this year, overtaking last year's earnings by a whopping 20%. With time, as Russia finds new markets for itself, the volume of exports will rise as well. Russia's economy contracted by 4% in the second quarter of this year. This was well below predictions of a near 7% contraction that experts had suggested Moscow would have to suffer. Russia's current account surplus has more than tripled since last year. The surplus in the current account widened to almost 167 billion US dollars in the period between January to July, compared with just over $50 billion during the same period a year earlier. Now, Russia is beginning to loosen the restrictions it had put in place to cushion the economy from being impacted by the sanctions. The Moscow Exchange has begun trading in debt securities for investors from friendly countries that haven't joined the sanctions imposed by the US and its allies. Earlier this month, Russian President Vladimir Putin had barred some foreign banks and energy companies from exiting their businesses in the country. Separately, Putin has also allowed for Russia's sovereign wealth fund to invest in the currencies of nations like China, India, and Turkey. According to Bloomberg, Russian policymakers are now looking inward for sources of funding, floating concepts like charity bonds and participation financing, while also aiming to discourage businesses from using toxic currencies. The Russian central bank is working to ensure state companies convert their foreign exchange holdings into the currencies of friendly countries. Essentially, a major de-dollarization campaign is being exercised by Russia. This is a major reason why sanctions have had their impact blunted by Moscow. Do you think the Russian economy will eventually suffer due to the sanctions?